Hello everyone and welcome to today's webinar. My name is Stefan Taranchokov and I'm the head of the customer support department at GDMFX. I'm also a trading analyst and your host today. The topic today is momentum trading, and this is a very useful and efficient trading technique. Now, before we go into discussing the actual strategy, let's have a look at a few basic and common characteristics of this strategy. Basically, it's suitable for all kinds of traders, but extremely useful for those traders who have little time for trading, simply because it doesn't require much time, and usually on a typical week you make something like 2, 3, 4 trades. What's extremely good for this trading strategy is that if you employ it correctly, you would be able to make quite a good profit. You can make quite a good profit. We're speaking about around 300 for 100 pips a week. Now, this trading strategy is a market profile technique with a price action setup. Basically, it depends on trend following, which identifies the direction of a financial instrument. Also, it identifies a certain range within which that instrument ranges before breaking out in one or the other direction. This trading strategy works extremely well on volatile instruments, liquid instruments, which have both liquidity. This means there are people trading with this instrument, and also volatile, such instruments that make quite significant movements, at least 90 pips per week. Examples of instruments that this strategy works best on are euro-dollar, the cable, that's the British pound versus the US dollar, also euro versus Japanese yen, British pound versus Japanese yen, the Aussie, this is the Australian dollar versus the US dollar, also US dollar versus the Swiss franc, and euro versus Swiss franc. Of course, there are many more instruments that this strategy can work well on. These were just examples. Just to remember that what's important is that these instruments should be volatile and to have enough liquidity. Other instruments that this strategy can also work on to a lesser extent are the US dollar versus the Japanese yen, euro versus the British pound, US dollar versus the Canadian dollar, and other instruments which do have liquidity but are not that volatile. Now, this strategy is using two main charts, namely the weekly chart and the 4-hour chart. Of course, each and every trader can employ different periods of the chart in addition to those two in order to find the levels where to enter and where to exit more accurately. Now, this, as I mentioned, this strategy depends on opening 2, 3, up to 4 trades per week and derives from the so-called market profile technique. This means that what we count on is to determine what level the price is traded most in a given time period. The value areas, the range values that we determine act as extremely strong support and resistance levels. Market research has shown that the most important trading levels are established in the first 16 hours of the trading week, and this is what this trading strategy employs. We'll have a look at a few examples later on. Well, let's go into the actual strategy. Now, what is needed for this strategy is first we look into a weekly chart to find weeks where the momentum was strong. Well, what does it mean momentum is strong? Well, there is a well-established market direction, and there is momentum. There is power for this movement to be sustained. As you can see in these highlighted candles, there is a well-established direction, and also there is momentum. What we are looking for is candlesticks which are large and which have little or no shadows. Shadow is this thing on the candle. This is the lower shadow, this is the upper shadow. So what we're looking for is such candlesticks which have little or no shadows, as we can see right here. This means that the closing price, the opening price are extremely close to the highest and the lowest values reached during this trading week. Let's have a look at what we need next is a 4-hour chart in order to establish the range for trading. Now, we'll have a look at this in more detail later, but what's important is that we need to identify first the range, as indicated by the green lines here, and then to look for breakouts. But breakout is simply the price breaking either to the upward direction or downward direction from the range. On this chart, you can see that this was actually a false breakout. The price went up a little bit, but it didn't manage to sustain the movement, and eventually it went back down. This is another example where the price broke out first over here, which was actually a false breakout, and then it went back in the range and did another false breakout to the upward direction. Now, if we employ this strategy correctly, we would be able to identify the false breakouts from the true ones. And while you practice this strategy, while you practice your trading in general, you will be able to better and better identify those breakouts. Now, what I would like to mention before we go further is that this strategy depends on the following assumption. Actually, it's not an assumption, it's quite a well-established fact coming from market research. Basically, what it says is when you find a week with an extremely stressed direction and momentum, there is a very high chance that the following week the price will go in a certain range before breaking out in either direction. So let's move further. Well, this chart is another example of a range. As we can see right here, this level has been acting as a strong resistance. This level has been acting as strong support, and eventually the price might break out. What we're looking for is real breakouts, not fake ones. So of course we can make a good profit. Coming back to this chart, just to, again, to recap, the first step in this strategy is to look at a weekly chart. This chart is the weekly chart of the euro versus the Japanese yen. We're looking for large candles which have a little or no shadows. So little or no shadows means that the opening price and the closing price are extremely close to the highest and the lowest values reached during this trading period, in our case, week. Once we identify such candles, what we're interested in, for example, we can see that right here there is such a candle. Then what we do is, as soon as this trading week, the next trading week starts, we have to plot a range where the price most probably will vary before breaking out in either direction. Most commonly the price breaks out in the same direction as the previous week. Now, the next step, as we mentioned, is we look into a 4-hour chart. So this 4-hour chart, we start looking at the next week. We identify a big candle. Let me go back. We identify a big candle right here. And as soon as the next trading week starts, we enable the 4-hour chart and we start plotting our range. Basically, as I mentioned, market research has shown that the range, the most important price levels that are established the first 16 hours of the trading week. So what we do is we switch to a 4-hour chart. We count 4 candles, 1, 2, 3, 4. This is the 4th candle, this is the first one, and what we do is we plot the highest and the lowest levels for these 16 hours. The upper level acts as an extremely strong resistance level. The lower line acts as an extremely strong support line. So, in addition to that, we also have to enable the period separators. Most probably you know how to do it. You have to right-click on your chart, go to Properties, go to the second tab, and enable Show Period Separators. This shows these vertical lines so you can better identify the start and the end of the trading period. Also, we need a 200 period exponential moving average, which is one of the most common indicators, technical indicators traders are monitoring. Why a 200 period moving average? Well, it is established that price action occurs near or at the moving average. So when the price goes near it, it can either move along for a short period or, as we can see in this case, break through. Now, what we're interested in next, after we plot our range, is we're looking at a breakout. Let's go back and see here. Here, we can see an example of a false breakout. The price went up. Actually, we're not sure whether it's a false breakout or a true one. If we see the rest of the chart, we can see whether the price went up, continued going up, which in this case would be a true breakout, or if it was a false breakout, meaning that the price from here goes back down. Even if it goes back down, actually, you would be able to make a profit, a certain profit, but what we're interested in is not this kind of profit. We're interested in at least 70 pips movement. Now, what we have to always look for, a couple of very important rules we have to follow. First rule, in this trading strategy, once we establish our price ranges, here, this is our price range. As soon as we establish it, we should be monitoring the exponential moving average. It should not be intersected in the current week. If it does, we stay away from the market, simply because if this happens, most probably there will be a change in direction. And it's, at least myself, I would not trade this. This is the first rule. The EMA should not be crossed within the current week. Second very important rule is that the range of the first 16 hours, right here, should be at least 70 pips in size. The bigger the better, of course, but at least 70 pips in size. Otherwise, it might not be worth it trading it. There are certain traders who can try for, let's say, 40, 50 pips, but myself, I count on at least 70 pips of this range. So, as long as these two rules are met, price range at least 70 pips and DMA not being crossed in the current week by the price, then we can go forward with our strategy. Now, next, what we're looking for is a breakout. As we can see right here, the price broke out, and in our case, it is a real breakout. Now, these areas right here are a little bit risky, meaning that we have to wait for a confirmation that the breakout is real, just to play it safe. Better lose, let's say, 10, 15, 20 pips from your profit rather than go into a position, opening a position in a rush. So in this particular example, this is the confirmation of a breakout. So I would open a position no sooner than here. Well, this is from our previous example. This is a 4-hour chart. We enter here a short position, maybe a pending order to sell or an instant execution order, whichever you prefer. And what we need to do next, of course, is to set our targets, our take profit and our stop loss. Well, my advice, of course, everybody decides for him or herself, but my advice is always have both a take profit and a stop loss when opening a position. Well, in this example, here is our entry. We were looking for a confirmation of the breakout, and then we enter take profit around this level. I'll show you the reason why I entered it at this level, and we enter a stop loss as well. And we just leave the position to do its job. Statistics show that this strategy overall can make you quite good profits, as I mentioned, around 300 pips. So the reason I put the take profit at this level is seen on the daily chart. So this level was acting as an extremely strong support here. Therefore, I entered the take profit at this level. Stop loss here, because this price level has been tested several times, including in the last week, right here. Actually, if you employ additional strategies for your risk management, you can manage your targets, your take profit and stop loss in a very efficient way, so that your risk is always taken to the minimum. Now, this is apart from what we're discussing today. As a general rule, I would advise each and everyone to build up a strategy gradually, and once this strategy is in place, to always follow it, to have certain rules which are important and never to go away from them. Take the emotions to the minimum in order to be more efficient. Well, more or less, this is what would have happened if we were following this momentum trading strategy. Basically, we have plotted our range. We look for a confirmed breakout. Once we have it, we enter our, in this case, short position, and we plot our targets. That's all. Simple as that. Well, as probably you have seen, there is a questions function in your GoToWebinar. So if you have any questions, please ask them. Well, speaking of that, we have a question. What would be the next webinar? Well, you can always monitor and sign up for our webinars at our website, GDMFX.com, and subsection Hermes Academy webinars. So to answer your question, the next webinar is going to be on the 1st of October, which is a Wednesday. And the topic would be Introduction to Binary Options. We'll be showing you how to trade binary options. Now, I would leave you around 5 minutes for a short break, during which, if you have any questions, please type them in via the questions function on your GoToWebinar, and I'll be more than happy to answer them. Okay, see you back in 5 minutes. Welcome back, everyone. I hope you do have a lot of questions for me. Okay, let's have a look. One of the questions is how to make our range. Well, going back on our presentation, basically the first step in this strategy, momentum trading, is to find large candles whose shadows, upper and lower shadows, are close, actually are small or non-existent. Shadows, again, are these lines coming out of the candle. So as we can see right here, these lines are almost missing. They're quite small or equal to 0. So this is a weekly chart. Once we find such a candle, we go to a 4-hour chart in the following week. Beginning of next week, we enable a 4-hour chart. And using the first 4 candlesticks on a 4-hour chart in the current week, we plot our range. So, as we can see, this is the first candle, and we count 1, 2, 3, 4. So here is the highest level. This gives us the upper level of our range. Here is the lowest level right here, and this gives us the lower bound of our range, the lower level. So this is how we plot our range. The next step is we wait for a breakout. So what is important is that after a strong move in one direction, as we can see right here, the price in the following week goes into between a range before going either direction. And we use that in our strategy. So once we plot our strategy, our range, we look for a breakout. For those of you who have joined later, what is necessary on our 4-hour chart is we have to place a period separator on our chart. We have to place a 200 period exponential moving average, and we have to plot our range. The 2 most important rules of this strategy is that within the trading week, the exponential moving average should not be crossed by the price itself, simply because when this happens, usually there is a reversal. And it's, I would say, quite risky to go into a trade at that time. And the second rule that we have to look for is that the range of the first 16 hours should be at least 70 pips in distance. So this distance here should be at least 70 pips in order for us to have a good profit potential and for this strategy to work well. Next step, after we have a confirmed breakout, as we can see here, we go into opening a position. If the previous week the price was going down and we have a breakout in the downward direction, we open a short position, maybe an instant execution, pressing the button at the time you see this breakout here, confirmation of breakout, or you can place a pending order to enter somewhere around this level to sell. Next step, plot our target, stop loss and take profit, and wait for this position to do its magic. This chart demonstrates why the take profit was entered here, and also we can see why the stop loss was around this level. Well, if you're a little bit more of a risky trader, you might move your stop loss a little bit further up, for example, somewhere around here. However, the more conservative ones, I would advise to go somewhere around here. If you attend one of our next webinars, risk management, you would be able to better understand how to equalize your positions, how to maintain a low risk level, and how to have a trade, to build a trading strategy which takes your risk to the minimum and at the same time enables your profit potential to go up. Okay, we have answered the question about how to plot the range. What is the next day? Well, I'm sorry, but you have to clarify your question. Today is Wednesday, tomorrow is Thursday. Okay, if you mean the next webinar, when's the next webinar? It's on the 1st of October, which is a Wednesday. You can monitor all the webinars on our website, GDMFX.com, subsection Hermes Academy webinars. Also, you can sign up for our webinars from there. We have a question, does this strategy always work? Well, this strategy works most of the cases. However, you have to practice in order to learn how to employ it better and better, and also you have to follow your own rules of trading in order to have the most efficient and good results. Some of the times the position might go to the stop loss. Sometimes, most of the times, let's hope it goes to your take profit. However, as you can probably guess, there is no trading strategy which is 100% accurate all of the time. We're human beings, everybody reads something in a different way, and that's what's good about trading. Okay, well, let's see. Should I filter news? Well, by all means, having the news into consideration at all times is always a good thing. So, for example, let's go back. For example, if you forget about this, let's say that you're looking at this right now and you're waiting for a major announcement. For example, Mario Draghi speaks. Well, you would better consider whether to rush into opening a position right here or to wait for a little bit. Always, when major news are coming out, there is an extremely high volatility. And if you attend, or if you have attended one of our other webinars called News Trading, you would know how to employ a strategy which makes the use of the news announcements. We have a question, can we use this strategy in combination with other trading strategies? Well, this strategy better be used solely in the way that we described here. If you try to combine it with, for example, candlestick patterns or chart patterns or news trading, well, it might not work that well. And always have your targets, always enter stop loss and a take profit. And it's once you enter them, it's not very good to move them. Take your emotions to the minimum. We have a question, can I watch the webinar later? Well, if you visit our YouTube channel, you would be able to see previous webinars recordings and also our daily market outlook. So by all means, use that too. And in addition to that, you can mail us any questions about the webinar. By using the provided email, webinar@gdmfx.com, or you can go directly on our website and use our support team. Just a reminder, my name is Stefan Taranchokov, and I'm actually the head of the customer support department at GDMFX. I would like to have the opportunity also to prompt each and every one of you, if you have any questions, comments, or suggestions for us, for our customer support department, please share them. You can send us an email to customersupport@gdmfx, go to our website and use the chat function, whichever is better for you and you prefer it, sorry, please do. Your feedback is important for us, and we're looking to improve our service each and every day. Well, moving on, if there are no further questions, I'll leave you around 1 or 2 minutes for your last questions for today. In the meantime, let me mention that next week the topic of our webinar would be an extremely interesting one. We'll talk about our binary options. It's a relatively new product that we have on our platform. So to all of you who are not yet familiar with how to use and how to trade the binary options, please sign up and attend our webinar. We'll be happy to have you. We have a question, is it necessary to stay in front of the computer for a long time in order to use this strategy? Well, I did mention in the beginning, probably some of you joined later, this momentum trading strategy is extremely useful. It's extremely suitable to traders who have a little time for trading, simply because it doesn't require so much time. What you need to do is you have to monitor the market for the first 16 hours, mainly, plot your ranges, and after that you only have to be looking for a breakout. Well, what you can do, in addition to pending orders, because looking at this chart, when the price is right here, you don't have a confirmation whether it's a true breakout, a real breakout, or whether it's a false one. Well, you can simply place an alert right here, so that when the price goes down to here, your terminal MT4 terminal, can even send you an email so that you can go in front of your computer and start monitoring when the time comes. Or you can use the pending orders in order to simply tell the platform where to enter the market. Well, there are no other questions so far, so we'll go into calling it a day. As I mentioned, if you have any questions pertaining to today's webinar or one of our previous webinars, please write us an email to webinar@gdmfx.com. For all other questions, queries, requests, etc., please use our customer support team. You can contact us via our chat function available on our website 24/5, or you can drop us an email to customersupport@gdmfx.com. It was a pleasure having you all here today. Stefan Taranchokov, my name is. Thank you for attending and wish you best of luck on your trades, and see you next time. Bye-bye now.